Hello, and thanks for tuning into OSHTV. That's Ozzy Sells Homes TV. My name is Ozzy Martin, and this morning I'm joined by Alicia. She is a senior mortgage consultant with Bank of America. Good morning, Alicia.
Good morning, thank you.
Great. So, Alicia, there seems to be some mystery behind what happens exactly during the loan process from beginning to end. But first, I wanted to touch on what are the differences between a pre-approval and a pre-qualification, and which one is more significant?
Sure, there's definitely a difference. The pre-qualification is more of an unofficial statement. At that time, you're getting a feel for your budget to find out how much you can afford. So you're looking for a price range there. The pre-approval, it's very official. Your credit is run, your documents are reviewed and validated, and you can actually get a feel for what you'll be approved for.
Okay, well, that all makes sense. Back to my original thought, what happens after the pre-approval process, basically when the buyer's offer is accepted and attorney review is concluded?
Okay, so actually, if I back up, during that attorney review process is when you're going to start positioning, the buyer will start positioning themselves to move forward with a loan application. Their documentation might be in at that point. They're monitoring rates. Once you actually move forward with your loan application, the appraisal is ordered and your documents are reviewed.
Right, so it sounds like there's some pretty heavy emphasis based on documentation these days. Where was that process back in the spike of the market versus today, and how important is it?
Sure, it's much different now. During the height of the market, there was reduced stock loans and options where you didn't need documentation. And nowadays, everything is going to be full documentation.
Wow, okay. So it seems like basically lenders and buyers are that much more protected because of the heavy emphasis on the documentation process these days.
Right.
All right, so what are the next steps?
Okay, so while the underwriting process is happening, all the income and the asset documents, your W-2s, your pay stubs, 2 months bank statements, it's all being validated, and the appraisal is being done with the realtor.
Okay. Speaking about appraisals, I know that firsthand working with buyers, there's been a couple of situations where the appraisals have come in at a much lower value versus the purchase price, and I know that basically at that point the sellers had two options: basically meet the lowered appraisal value,
right,
or the deal just goes kaput, unfortunately.
It blows up on you, right.
How important is that these days, and how many times do you see that happening?
It's not too frequently, but every once in a while you do see that appraised value coming in low. It's very important for the appraised value to support that purchase price, because that's the collateral for the loan, and that's why you would have that situation.
Right. Okay, so then I guess, you know, the appraisal's in, everything's good, it matches the purchase price, and now we're on to the commitment phase of the lending process. Sure.
So next phase, yes, it's that commitment date, which is on the contract. Once the appraisal is in and everything's all kosher there, and the documents have been reviewed and everything is valid there, official mortgage commitment can be issued to the attorney.
And then once the attorney has the mortgage commitment, what does he do from there?
Sure, the attorney is going to take that commitment and then go order title and make sure that there's no outstanding liens on that property that's going to jeopardize the ownership for the new buyer.
Right. Very, very crucial step, especially in today's market. Now, how often are you able to meet guidelines, deadlines, time frames, and what's your average process behind the scenes in order to meet like stringent close times? I mean, you know, I know that before we were doing 30-day closings like it was nothing. I'm sure that's changed some today.
Sure, there's a lot more that needs to be reviewed. There's a lot more back-end stuff that needs to happen for that loan to be made. So 30-day closing still can be done, but the industry has moved toward a 45 to 60-day closing.
Right, yeah.
Just a little bit more breathing room to get that commitment in on time, to get that closing done on time. The biggest delays with those dates, the commitment date and the closing date, are going to be missing some of that documentation up front, the income and the asset documentation, some delay in the appraisal if it needs to be revised or corrected, and just having that title work back on time.
Right, so three very important steps in the lending process, and don't want to get into it now, but I'm sure we'll touch on that in later episodes of OSHTV. Well, Alicia, I just want to thank you for your time today.
Okay, thanks for having me.
I really hope that we can get you back on Mortgage Masters soon. For more information about this, or for Alicia's contact information, or to set up a free loan consultation, her information will be at the end of this video. Once again, I'd like to thank you for tuning into another episode of OSHTV Mortgage Masters, and I hope to see you again back soon. Thank you.